Aniruddha Sarkar from Quest Investment Advisors is now with us on the show. Aniruddha, morning. Thank you for joining in. I know Zomato is one of your top holdings, but did you analyze Ola Electric? As Hormus was pointing out, it's fallen 35% from its recent peak.
Yeah, hi, good morning. So I think that is one company, when the company got listed, we had a lot of discussions around the valuations, and I think that continues to remain a big concern that, what is the right valuation for companies in that space, because I'm also invested into the two-wheeler companies which are doing exceptionally well when I talk about both on the IC engines and on the EV. When I look at valuation of that company compared to Ola Electric, it's very difficult for me to make a sense that, what is the right valuation for this company. So we have avoided it from the day of IPO, and even now after the 1 month lock-in has opened, we are avoiding it as of now.
Okay. Talking about valuations, you're avoiding Ola Electric on the back of that, but you do have some interesting names in your portfolio, be it Zomato, which has run up so much in the last couple of months, be it Trent as well. That's a one-way move. Are valuations justified at current levels for these two names?
Yeah, absolutely. I think, one thing which we need to keep an eye on is the earnings supporting the valuations. That is most important. Like if I look at, what has happened with a company like, say, Tata Trent, it's very difficult for anyone to give me a company which is growing at 55 to 65% Y on Y with regard to its, top line, bottom line. And the amount of expansion which the company has been doing has been exceptionally well. I would say from our initial entry point, though the stock has become almost 5 times, but I would say we continue to have it among our top 3 holding because the management's execution quality has been impeccable with regard to all the expansions which they have done. Also, the new growth area which the management is talking about, which is the Star Bazaar, that is something which we are also very, very bullish on. So we'll have to see how they are able to execute all the different business verticals. Coming to Zomato, I would say, so coming to Zomato, I would say, yes, if I look at the past numbers, it looks very expensive. But if I look at where the numbers can be in FY26, 27, I would say it looks very attractive because considering the fact that, Blinkit, which is the big growth driver for Zomato, that will give a lot of cash flows. And you'll see the numbers looking very attractive on a FY26, 27 numbers.
Any other stocks that you guys are pushing now, where valuations is still okay, relatively attractive?
So without getting into names, I would say that some sectors where I feel a good amount of valuation comfort is there. One is the healthcare space. So I think pharma is one space where from not having any pharma stock 6-8 months back, we have almost 6-7% exposure to that space. Along with that, we are looking at increasing exposure into the pharma and healthcare because I think that gives us a good amount of opportunity with what is happening in the US with the most recent, the Biosecure Act. I think that opens up a lot of opportunity for Indian healthcare companies because if they want to cut down on their exposure into the Chinese healthcare companies, I think biggest beneficiary will be the Indian companies. So I think pharma is one space where valuation comfort is there. IT is again another space where I would say good valuation comfort is there. The very fact that with the rate cuts in the US likely to happen in the next couple of months, I think in the next policy meet itself, we could see a rate cut. That is again going to be a very good trigger for the discretionary IT budgets, which will be again good for the Indian IT companies.
Okay. Aniruddha, the other interesting name in your PMS is TVS Holdings. Out of the entire holding company space, you have this one stock here. Can you explain the rationale first up and what is the trigger going forward for all these holding companies? Because we do see some of the notifications that keep coming in from the regulator here.
Yeah, absolutely. I think, many of these holding companies, they have excellent deep value built into it. Now, if I talk about TVS Holding, which is my, among my top 5, top 10 holdings, I would say if I look at the core underlying, so now this TVS Holding would have the 3 verticals. One is autos, which is basically the holding company for TVS Motors. Now, TVS Holding, it owns around 50% of TVS Motors. And where the stock trades today, though the stock has given us almost like 60-70% upside from our initial entry point, but I think where it stands today, it still quotes at a 55% holdco, 55 to 60% holdco discount to its holding company, to its holding in TVS Motors. The other 2 parts are it has a real estate business called Emerald Haven Realty, which is doing exceptionally well. It has already developed around 2 million square feet. Another 6 million square feet is under development. And the third part is the NBFC business, this NBFC, which is called the TVS Credit. That is kind of a very high growth business area. TVS Motors owns around 80% into the TVS Credit. And most recently, TVS Holdings, they acquired a NCR-based NBFC. The combined AUM of the NBFC would be around 30,000 crore plus. I believe each of these verticals, auto, the real estate, and NBFC, they are all doing exceptionally well, and it looks like a very deep value to me, even at these levels.
SH Kelkar is a stock we don't often talk about, but it's a company which makes fragrances, particular for the food industry. Now, even the stock return has been subpar compared to the kind of market returns many of the mid-caps have given. I think I was looking at the 5-year CAGR return. It's just about 14%. So it would have been an underperformer compared to, many of the mid-caps. So why is it that you find it attractive?
So we entered into SH Kelkar around 6-8 months back because we had the same concerns in the past that, so basically the company was seeing an erosion in their margins because if I look at the two business verticals, the two parts of its business, the bigger part is the fragrance business. That makes up almost like 80-85% of the business, and the food business, which is the food flavor business, that is the smaller part. Now, within the fragrance, I think fragrance typically is not used if you're not going to go out, and that was one part which got impacted during the COVID, wherein that if people are being at home, you typically won't be using the fragrance. Now, post COVID, I would say in the last 18 months, a lot of growth has picked up. A company had done a couple of acquisitions in the past overseas. And I think because of that, they are seeing now a good traction in the overseas market. They got a good, decent, large order from a global MNC FMCG company, and that opens the gateways for them to tap into other FMCG companies internationally. Margins have bottomed out, margins are improving. So that was one kind of the inflection point which gave us, an entry that, the margins have improved, top line growth is coming in. The leverage and everything which was there in the past, that is declining, and all the acquisitions are going to pay off. It's the largest aromatic chemicals in the country, and I think it's again kind of the niche play in the chemical space.
Right, Aniruddha, it was a great chat. Thank you so much for throwing light on different sectors and different stocks as well. We'll speak to you very soon again. That's all about market fundamentals and valuations. But it's time for another break. When we come back, we'll get you more on the markets on the other side, so stay tuned for that.